Hey guys, it is October the 19th. I'm still a little under the weather, but man, this is an exciting earnings season. And it's been so interesting because what the companies report and how the stocks react, in a lot of cases, that's two different things, like two diametrically completely different things. It makes me definitely want to be very careful playing specifically earnings season. I'm more likely to come in afterwards once I realize that this is just short covering or this is just a reaction to the top line number that is not accurate to what actually happened at the company. Now, some of the reason this is happening is because estimates have been quote unquote lowered below what the company is producing. I don't love that because if you're not showing growth, then it can't very well give you a growth multiple, even if you beat estimates. So I'm going to show you that. And today, mostly what I'm going to talk about is Netflix because that's what people care about. And then I'm going to show you one little glimmer of Abbott, only because, as you know, we've been very bullish on Senseonics, and you always do get a little bit of intelligence from Abbott. In general, this is not a call on Abbott in any way, shape, or form, just in case, but I'll reiterate that. So let's take a look at the markets. I'm going to share my screen. Past performance, it's not indicative of future returns. If we look at the different indices, you can see it's a range. The Russell finally being down more than the rest makes sense to me. Now, I keep getting people asking me, oh, May, is that a takeout candidate? Oh, May, is that a takeout candidate? I'm going to just say this as a blanket. The only possible companies that are takeout candidates, okay, if the company has no earnings, that is not a takeout candidate in this particular marketplace, unless you have a very specific reason why someone would want to take it out. So therefore, the caveats to that might be in healthcare. In healthcare, there's actually enough cash, and there are strategic reasons that people would take stuff out, not the least of which is if the drug sells, but the problem is distribution or supply chain, then that's a very easy, fast fix that would be very accretive. Because the healthcare companies, so many of them are coming out of COVID and need that growth, that's probably the only place where I would even remotely be like, oh yeah, that makes sense. Any other company, if it's not a take private candidate, it is a very highly unlikely that a deal or something like that magically happens in the fourth quarter. Now, I'm not saying it couldn't happen. Strange things happen, but it's not likely is what I'm saying. And what do I mean by take private? Just so one day I'll do a different video on that, but here I can stop share. So when we're talking about take privates, that company really ought to have good cash flow, good earnings, decent earnings, and just all around really, really good metrics. But what they're experiencing is low valuation on the public markets. In that case, there would absolutely be private equity firms, other folks that would just take it private. That I can see happening if this market goes down significantly. But strategic growth buys of a company that has a crazy multiple, no earnings for multiple years, that, just so you know, generally speaking, even I don't do small cap and mid cap in general, I don't see it. Okay. Now, if you're doing this analysis, you will, of course, want to back out CapEx and stuff like that. Because if the reason they don't have earnings is just they're plowing more into growth, then that's a different story. But anyways, I will do a separate video on that. Let's actually get back to our story. Share screen. Okay, so this is what we're seeing here. The indices down quite a bit, the Russell down more. I think that's actually right because the Russell's actually hung in there like a champ. I don't care what people are saying about the multiples on the Russell, because unless you can prove to me that most of those earnings are actually not left empty because there's a negative number there, then that's fine. And in fairness, there is actually a fair amount of materials and mining in the Russell, but it's not I mean, look at the percentages. You have to be so much of the Russell in order to actually be meaningful. Otherwise, I think what I'm saying still stands. Here is what the S&P looks like today. You can see a lot of large cap is just getting clobbered. Tesla reports tomorrow. And then last couple of macro things that we're going to look at. All right, I don't know why that screen doesn't want to come up. We've got a couple of economic data points, but I don't think that's what's going to move things. It's really going to be about earnings this week. This morning, we had a lot of earnings reports. This evening, we have IBM, Tesla. That's going to probably affect large cap a lot. And then tomorrow, we've got a whole slew of earnings as well. You know, and then next week we've got a lot of large cap tech reporting. So right now, whatever's going on in this market, it's really dancing around the middle is what I'm saying. But you have to be really careful. I would really prefer people hold cash if they can. And so they have the very strong feelings. And I would almost, despite, even if you are paying a little bit more, paying a little bit less, wait for earnings and then wait a couple days after, because this market is so bizarre. Market's so bizarre to add to positions. Now, if you're just a day trader, I've got an awesome guy that you can listen to bright and early in the morning, Richard. He's very talented at what he does. So definitely check out his stuff on gurula.net as well. All right, now let's get into Netflix. And, you know, we always watch Netflix because it's such an intriguing company. As you know, my colleague David here is a big fan of Disney. And so we're always interested in whether Netflix is going to say something nasty about Disney or something like this, right? Netflix up 13% today. Is it good? Is it bad? I think it's hard to say. And the reason I think it's hard to say is because if you ask me, May, was this a good quarter? No, it wasn't a good quarter. It was a very okay quarter to slightly below average quarter, if I was honest. Now, a couple of things that you really want to look at and understand is that, did they get subscriber growth? Yeah. Did they do it at the expense of earnings? Yeah, they did. Okay. Yeah, they did, is their answer to that. And I'm going to show you that very clearly, because I think the way they present earnings sometimes may be confusing, or it just may be that there's a bunch of people in media that don't agree with me. Fine, it takes more than one opinion to make a market, but this thing is up 13%. Now, the reason I'm not like sell more and more sell is because if you really look at the valuation, it does trade in line with how desperate the situation is at Netflix. And I'm going to call it desperate. Look, they have to undergo a massive strategic change. And I'm going to actually explain to you very clearly, even probably more clearly than what they said on the call, because it did, in my, you know, fevered haze of being sick, make sense finally, but not because of what they said on the call, but because of reading all of their releases and their filings on this quarter, what exactly it is that people are on about. So let me show you. This is what they did on the quarter, up 6% on top line. Solid. Good job, guys. That comes from your increase in sub growth. Okay. Operating income down 13%. And that's despite the fact that you decreased your marketing expense by 11%. What's that all about? Right? Very strange. Okay. So essentially they had more tech development, they had more G&A, they had more cost of revenues. As a result, though, of all of this, realize that, and I'm going to show you how they ended up going from down 13 to down 4, because I was like, what? I'm so confused. Okay. It wasn't on lower share count, in case anybody's concerned. They actually issued more shares on the quarter, but it wasn't outstanding. It really, I think, was to pay people. But if we look at the cash flow statement, this actually is the one thing that I would say, not bad. This actually was their strategy announced 2 years ago or a year and a half ago, 2 years ago, but really they've been at it for a little bit longer than that. And that really is amortization of content assets. So this was a big cash add back because this is a non-cash charge that they take on the other page, and then it gets added back here. So you do have actually improved cash flow. Is it better than last year over year? Yeah, by a lot. Is it what we had in September of 2020 when things were amazing sauce? No, it is not. So that's why I'm saying it's good, but it's not amazing or anything. But that is actually one of the bigger places that is a positive within all of this. Okay, subscribers, let's actually talk about it. Okay, they added 2.1 million subs. I should have just done the math here to make it easy. In 2021, they added 4 million subscribers. So they had a decline in the total number of subscribers by about a million and change, okay? So it wasn't this amazing quarter of subscriber ads. It was a solid quarter after multiple quarters of decreasing subscribers, but it wasn't like, oh my God, this is so much better than 2021. Now, does the street want to give them credit for it? Sure they do, but there's a couple of things in here that we kind of need to pay attention to. The first is average paying memberships. And in the US, where they actually added subscribers fair and square more than the previous year, down 1% on average paying memberships. Average revenue per membership, so there must be some skew to this, is $16.37. Now I'm going to show you why this number is a little bit strange, but they swear that when they upsell to HD or Ultra 4K or whatever, that people, it's very sticky and people stick with it. But you got to understand that the way that they upgraded everyone was just by raising prices and then giving you some kind of notice. And if you didn't click through like 20 different buttons to change back to your old subscription, you are now charged $19.99. So I actually am probably one of the people that decreased my subscription level because I travel so much. I'm barely ever on this gigantic TV. And when I'm home, I'm not really watching that. So I think this is still a little bit early to be like, oh yeah, the 12%, the 1637 sticks for the US, especially with the $6.99 membership. Okay. So we would anticipate that average revenue per membership should actually go down and not up going forward. And it's really obscured in these numbers because it's really unclear how many ads they had from the $6.99, quite frankly. I will show you as well that in Europe, and they blamed FX to the tune of $1 billion. And I don't know if it's because I'm sick, I have zero tolerance for that because you have a subscriber model. You don't know how to hedge? Is that what you're telling me? Do you know what I'm saying? It's like ridiculous, not to mention that over here on the cash flow statement, you took a $348,000 whatever gain from your foreign currency reimbursement law, so on the debt. So I'm just like, you can't use that. You can't use that as an excuse for me. I'm just not interested. But nonetheless, they did it. And, Europe, slowing growth there, slowing growth as well in Latin America, slowing growth in Asia Pacific. Those are the three areas where you had started to see some pickup last year and then subsequent months. Are they still adding in Asia? Yeah, they are. Did they add overall thus far 9 months ending in the US, Europe, and Latin America? No, they did not. Okay. So yes, it's been flat this year to maybe slightly down, depending on how you want to do the math. Actually, just do the math. It's been flat. Okay. So I don't know that we can say, oh my God, this is an amazing quarter. It really shows that they are in a growth trajectory. I don't necessarily see it. I don't think all the things that they've implemented are there yet. Maybe I'm wrong. Maybe I'm right. I'm not sure. This is what Yahoo Finance put out because they're clearly and surely bullish the stock for whatever reason, every single article. And I get it. If the stock's up 13, then they're going to bias all the news stories that are related to the stock going up. And if the stock goes down, they just print all the stories that talk about it going down. But if you look at this, Hulu's really their biggest old time competitor. And yeah, they do, pay more or whatever. But it's the same price there. I don't think you can comp this to really any of the others. Disney, maybe. I mean, like Amazon Prime Video, you're not really competing that way with Amazon Prime. I mean, you're not getting Prime. Like if you're getting Amazon Prime, it's for free shipping. Maybe you're getting it for video, but I think that's more of a freebie throw in for people than it is. I'd love to see better numbers from Amazon on that, but this is an awkward chart that they gave out anyway. But nonetheless, I do think the thing that's right about this chart is that, there are other services that are cheaper. Paramount and Peacock are cheaper. Discovery's cheaper. Disney Plus is cheaper. All of these are, Apple TV is cheaper. Well, no, Apple TV is $8.99. Yeah, so it's cheaper. So on and so forth. And that's what they definitely didn't, really address. The best and closest that they addressed that was saying that they have more market share. Let's talk about that for a second. Okay, they talked about the fact that they have more market share than everybody else. But if the point is that everybody's been starting to enter this space and the pie isn't infinite, then that shouldn't be like the mantra that you're throwing yourself at. And then the only reason it made me think about it is they're saying they have 8% of viewing time in the United States. And if you look at this number, this is 73 million. That's 22% of the population of the United States. So we got to remove kids from that, right? That 300, whatever it is, that's the population of the United States. I mean, I'm not sure what they're trying to say that they can grow to, and they have slowing growth internationally, okay? The other thing that kind of bothered me a little bit about this quarter was that I think what they're trying to do with the ad business is move to this model. Yes, okay, let me be not I think. The ad business model depends on you watching a lot of screen time, okay? Not a little bit of screen time, a lot of screen time. But I mean, how much, I mean, like, do you think, look, I get how YouTube gets it done. Do you know what I mean? Like there are 5-minute YouTubes, there are 10-minute YouTubes, there are like what have you. Am I gonna like watch more Netflix than YouTube? Am I gonna actually like that's the one thing that they didn't seem to really address at all was that if they're gonna really move towards this eyeballs number of stickiness within Netflix sort of thing, then you've got to prove to me how your $6.99 is actually going to increase my viewing time and everybody else's viewing time on Netflix such that that ad generator is more exciting than like even Facebook's ad generator, to be fair. Anyways, that is Netflix in a nutshell and why I'm like, okay, that said, is it cheap on valuation? Yes, it is. Am I worried? Did this quarter make me feel amazing sauce for next quarter? No, it did not. And so here, do I buy it? Do I sell it? I want to see where it settles and then I'll figure it out. If it settles someplace that is a valuation that makes no sense and bakes in a full recovery from Netflix, then yeah, I'm probably not going to be really stoked about that. But if it's something else, then it's something else. Okay. Um, really quick on Abbott, because I'm not going to go through all of its earnings. Its earnings are like, if you look at top line and bottom line, even if it beats guidance, the fact is they got to come through all that COVID. So the numbers look horrendous. But I do want to show you, because Abbott is a medical device company. One of the things they do as a solid for us is they do break out how things are going. Now, realize that international reported versus international organic looks very different. That's really the FX piece that has me so kind of melancholy this earnings season. Like I'm very like lackadaisical about how I feel in general. And that's not just the cold meds that I'm on, so to speak. But the US is still absolutely recovering, because if you think about it, during COVID, the hospitals only had time for COVID procedures, and now that's changed. Now, you got to be really careful, because if you look at how the US, all the other parts of the business, or most of the parts of the business, those are all heart related. And so it's a little bit hard to draw a proper conclusion. Hold on 1 second. Let me just stop share screen for a second and turn off some of this stuff. It's a little bit hard to draw conclusions on let me go back to it really quick. Okay, share screen. Okay, so it's a little bit hard in this number to be like, oh, the US cardio business was so great. It is. So if you are working with some kind of smaller cap company in cardio, you probably are do okay. But most of the bigger cap cardio guys have international exposure as well. And it tends to be at least half of their business, or approximately half of their business. And you can kind of see how aggressively that twisted the numbers by looking at the total column. That said, the diabetes business for Abbott does have international components, but I mean, look at this, up 31%. Now, Dexcom and Senseonics are the two companies within it. Senseonics is much smaller, so I think they can grow into it in a particular way. We'll see coming up, let me double check the earnings date, but we'll see coming up how Senseonic does. And they've now outsourced their sales to another company, which in fairness, I don't think they were gangbusters at it to begin with. So that was probably a good call. With semiconductors, the situation there improving dramatically, their supply chain, I'm hoping this quarter will be pretty decent. So I continue to just take very small bets on this. Now it's trading, it oftentimes from a trading range is between $1 and $3. I do think at some point, given the nature of this company, they get bought. They're about 9 years old, so there's no pressing need for them to get bought. And since the last quarter, I don't think they have an operational need to get bought. But nonetheless, like I said, post-COVID, with that big, beautiful treasury that a lot of these companies have, they're a candidate. And with that, I'll go ahead and take questions.
Hey, May, real short. Can you go back to that Netflix income statement?
Yeah.
The amortization item.
Where
Are
is
you
it?
saying you talked about amortization of content?
Yeah, I'm not sure where they're hiding it in here, to be honest. They don't have their Q out yet. They only have their K. And so this is what it looks like. And then they have this spreadsheet that they give. I don't want to like make a wrong comment here, but it should be above the line. You know, it should be up here
No,
somewhere.
you showed it. Oh, okay.
Oh,
You're
that's in the
you're
cash flow
showing
statement.
marketing went down. There it
Yeah,
is, right
here's the
there.
cash flow statement. Yeah, so this would have been a negative 3 billion. It's positive 3 billion this quarter.
Well, I mean, what are they doing? That's a soft cost. If you're amortizing, you're writing off content, right? Depreciating it. Then you're adding
Yeah,
it back. Then you're
yeah,
adding it
you're
back.
amortizing it. I mean, amortization, depreciation, we know it's the same thing. I'm with you. Do you know what I mean?
Right.
Like, yeah,
But I mean, it's a soft cost, which makes sense. You don't pay taxes on it, but
yeah. Hold on.
they're adding it back in as revenue.
No, no. Ooh, sorry. No, this is the cash flow statement. So if you want to understand how,
Oh, okay.
this is just the
Okay.
cash flow statement. So you'd always find DNA on cash flow just so that you can modify it back. It wouldn't be,
Gotcha.
it would be making this cost number look a certain way. You know what I mean?
Right. Right. Okay. Um, you're saying they lost money on hedging foreign currency?
No, they didn't hedge the foreign currency. They said they lost money on FX in general. They think that it's about $1 billion from between the revenue line and various items. And I think that if it was
Why
$1
would they
billion,
not? Why would they not hedge that?
I don't think they hedge it.
Why not?
I know, right? You have a SaaS model, for God's sakes, right? Sorry, I don't want to get too enervated. It's a cold. Like if you have a SaaS model and every single person out there is telling you, hey, I think the dollar's going to get a lot stronger given all this craziness that's happening in Europe. You telling me there's not one banker that came and said, hey, you want to hedge your FX?
Exactly. I
You
mean,
know what I'm saying?
even if the dollar's not strong, you should be hedging it.
No joke. You're a US company. Like,
Right.
so, you know, I mean, you're going to say that it cost you $1 billion. If it cost you across the income statement, $1 billion, not a joke. Do you know
Right.
what I mean? And like, just go look at the transcript. He talks about it. And I'm just like, what's wrong with you?
Somebody should question him on that.
Yeah, they didn't. These analysts just love Netflix, and I get it. I mean, the thing is pre-recorded,
Well,
so
no, maybe they just don't know. I mean, that's a very. I mean, that's like paying. That's like turn the lights on. You do it. You know.
I mean, it's a SaaS model, so technically you should be able to do it. It's interesting because if we compare them to other large cap companies, Microsoft does in fact talk about how precisely they hedge. They don't hedge it 100% because obviously that may or may not be the right call given their cash flow needs otherwise.
Right.
I can't recall if Google talks about it, but it's not like it's, you know, you the CFO of an international company. You can tell
Right.
me no one's ever talked to you about FX hedging before? You can't give me that.
Yeah. It's crazy. I can't believe that. Okay.
Especially if the number's $1 billion. If the number's like
Benioff
several
uses
hundred
that.
million, whatever, dude. But if it's like even then, several hundred million isn't fun. But the number was $1 billion. That's what they said. Okay. So I was like,
And you can't find it anywhere else where they were
where the FX is?
securities trading. Could it be under that? I mean,
Oh no, it's right here. Look, down 7. Right? With FX, constant currency up 7%. You know what I
wow.
mean?
Okay.
And then it's
I know those
down
Netflix guys.
8.
I'm going to talk to them, and
Yeah.
they're right across the street. So yeah, that's weird.
It's right here too, down 13. Without it on a constant currency, it would have been down 3. Very hedgeable.
Yeah. Okay.
It's possible that people are giving him credit for that because they're like, well, if they just hedged, they would have been great. I mean, I don't know how to feel about that. Maybe. That's why I'm saying I just want to stay out of this, and then I'm going to take a closer look after all the dust settles. I'll probably stay out of Netflix for a little while because, quite frankly, on a valuation business, from a valuation perspective, they do trade fairly cheap. I can't tell if they're actually like this one one month or one quarter does not subscriber growth create, especially since you're down on the year, right? And then it's still not clear to me exactly. Look, they've got to execute on this ad spend thing. And I may end up being way too late on this. I may be proved wrong, but I need to see, if really what you're doing is ad revenue spend, okay, like with Netflix, if really the way that your business model is going to go going forward is about ad spend, then I really need to see like average viewing time, like all the numbers that I get for everybody else that does that business in a particular way. If that's not what I'm seeing, then it's really hard to assess how your progress is on that business. And that totally fundamentally changes the business model. Additionally, I'm going to need to see that breakout. It can't just be subscriber growth. I think it's beautiful that everybody's just like, oh, look at the subscriber growth numbers go up. But it does look like, I mean, is it FX related? Maybe, I think so. But it also is unclear to me whether they just can't get pricing. Do you know what I mean?
Well, I've read somewhere the most ads they're going to run per hour is 4. That's not a minute. I mean,
Yeah.
when is the ad revenue going to show up as far as earnings?
I don't remember what they said, to be fair.
Fourth quarter. So they won't report it till the first quarter of next year.
But I would have loved to have seen just viewing time. Do you know what I mean? They showed market share, 8% versus like 2.5% for Disney, et cetera. But like, I need to actually see viewing time at that point, and then some kind of estimate associated with that. You know, if you're going to really do this transition, let's start seeing viewing time.
Right.
And maybe it helps
Do
nationally.
they have much competition?
Do they have much competition in domestic or international?
Everywhere.
Yeah, they do. I mean, if you're going to enter into the ad space, then you're going to compete against Google's YouTube product, right? You're going to compete against Disney. Well, Disney has no ads, so that's not the thing. You'll continue to compete against Hulu. You'll continue to compete against all the networks, right? In general, their space has increased dramatically as relates to, ad related stuff. Now, the other thing that I've always thought was a little bit bizarre in Netflix numbers is that even though they show subscriber growth, et cetera, if I contrast it to like Paramount or something like that, all the other networks will show me affiliate revenue. The way that they're talking about the revenue is just different. Now, I know people place ads in the actual Netflix productions, right? That's like one of the greatest memes and jokes right now on all of the social media platforms. But I mean, this is not like, I think that in general, they need to like totally transform the way they report numbers if we're really going to take them seriously, with all due respect. I'm just, I think it's this cold is making me a little more snarky than normal. But if we're going to take you seriously, Netflix, we really do need you to actually change the way you report numbers so we can see very clearly what's coming from amount of time on ad watching going forward, how much is coming from affiliate revenue, how much is coming from et cetera, et cetera, et cetera, and not this, whatever we saw this quarter. Oh, and you're going to need to hedge your currency. I don't understand why you're not doing that.
That's just poor management, in my opinion. It's
I've
got
been
to
a
be
huge fan of Netflix over the years too, so it actually hurts me to say that.
You heard what?
It hurts me a little bit to say all these mean things about Netflix because I've actually been a fan of this stock over the years a bit. But this wasn't the quarter to make me really excited about them. I mean, other people obviously are bidding the stock up. Awesome sauce. But I will be excited to see what they do next quarter. If it comes back in too aggressively, I would be a buyer. If it goes too aggressively up, but here in the middle, I'm not actually sure what to do with it. So I'm staying out.
Right. Speaking of ads, Tesla has 0, never advertised at all. Isn't that amazing?
Yeah.
That's
I mean,
just
that's the beauty of Elon and his craziness, right?
Well, it went 50% off. So I don't know. Tesla, to me, it seems like there's a lot of value there long term.
Elon's a machine. He's a machine. They'll report tonight. I mean, we still have to get and traverse past all of these tech earnings calls. It'll be really interesting to see it'll be really interesting to see how the others do. I'm really fascinated by, because, you've already got most of the companies coming out and reporting anything related to FX and anything related to slowdown in Europe, et cetera. I don't know. I'm worried about next week. So I really want to make sure that everyone, like for me, I want to make sure I have enough cash one way or the other.
Yeah, I think overall market, I mean, you've discounted, I mean, the 10 years at 4.10.
Yeah,
Everybody knows about inflation, so it's all about earnings.
I think so.
Okay.
All right, cool. Everybody stay healthy out there. Take care.